Welcome to the Broken Pie Chart Podcast, episode 380. I'm your host, Derek Moore. Back with me again is Shane Skinner. Mike Snyder is still on assignment. He's not really, but I keep saying that, so I'll keep continuing. He'll be back next week, though. All right. Everybody settle in. Pick yourself up the floor. Take a deep breath. The market actually was in red today, and I think it's the first red week. Shane, when was the last red week? Is it
the last week of March? The second to last week of March? It's been...
No, we've had down weeks since then, haven't we?
Oh, sorry. No, we had in the NASDAQ. Technically, the week of May 11th was down.
Okay. And I think you and I, we're not joking, but we're like, hey, the market is all the way back to prices, to levels we haven't seen since May 21st. So today the market was down. And by the market, I mean the S&P 500 index, 200 points, down 2.64%. And I mean, what's really interesting is we started the day with a really good jobs number. So let me just kind of set the table on what we saw this morning. The estimate for change in non-farm payrolls was a positive 88,000. Crushes the number, 172,000 new jobs came in. Also, I think it was April was revised from minus 16,000, so a loss of 16,000 jobs, to a positive 93. Like, that's pretty big. Change in private payrolls also beat 120,000 versus 89. And then you look at average hourly earnings on target, didn't miss. And you look at unemployment rate, I think it's not on our sheet here, but it stayed steady at 4.3. Like, you get this and you say, oh, we actually didn't have negative job growth in April. That's a big revision. And for a bit, the revisions were down. So this was good. Like, it set the table for, all right, that's good. Now, does that mean they're not cutting rates because employment's all right? All right, whatever. We'll set that aside for a second. Then we get the market. Charlie Bolello put something out, and he has number of large down days, the S&P from 1928 to 2026. I'm going to go through every single year and read. No, I'm not going to do that. I will tell you, 2026, we've had 10 days of a -1 decline or more, -2%, but less than 3, 2 days. So I think today was probably the second day. So 12 days have been more than 1%. Put that into perspective. 2025, 22 days, 1% down, 4 days, -2%, 3 days, -3% or more, 29 days total. But you look, I mean, 22, we had 63 types of, days, 40 days of 1%. I'm not going to go through all these. I mean, we'll see where the year closes, but 2019, there were only 15 days greater than 1%. I don't know, Shane, like, I look and think about some of the parabolic moves we've seen in semis. We've seen this Intel, Micron, ARM Holdings, like all of these companies that, I mean, really they've just gone parabolic. So it doesn't surprise me that we had a pullback. And the pullback is not like a massive, massive pullback. I mean, it's a big number, down, what did I say, 2.6%. But like, if you're holding Micron and you're holding ARM Holdings, I don't know. I mean, we can name a couple more. Like, you had to know this was coming, right, Shane?
Yeah, I mean, at least so far, I haven't seen something go up infinitely. Like, I don't think we've seen that just yet. We've seen some insane squeezes. But it's almost the old adage, like, what comes up must come back down at least slightly. Who knows where we continue from here into the rest of the summer in Q3. But yeah, this is an incredible run, historic run, once in a lifetime in some ways, right? Some people don't ever see this when they're in the market, depending on what they're in or how long they're in. It's nuts. And so I think
I saw it in the late 90s. I mean, for sure.
Right. I think the thing is that you've got two sides making making up sort of Micron holders right now. You got the side that, again, they've been long this for quite a while, at least a couple months, maybe a couple years, maybe longer. And then you have the crowd that's actively trading, whatever's hot at any given time. And this thing's ran a lot in a very short period of time. We saw this with SMCI a couple of years ago. We've seen it actually across the whole market recently in a lot of names. And so this is healthy. It's probably needed.
The difference is, though, that a lot of these names that we're talking about, like, their earnings are really good. And there's this whole debate going on right now when you look at the revenue of these companies and you look at the net income. And I'm not early on this. I'm probably requoting a bunch of people I've heard talking about this, but I've been looking at this, and I follow the net profit margins based upon the forward 12-month estimates on the S&P. We go over that every week.
Right.
And 15.7% is the net profit margin estimate based on forward sales, forward 12-month estimated net income, or EPS. And so a lot of this stuff has been margins, and we've been kind of saying, like, with some of these companies, their multiples are not crazy. It's not like I said, I lived through the late 90s, early 90s to late 90s, and then obviously the March 2000. It's just back then the multiples were crazy high. It didn't even make sense. They're not, but at the same time, I think the reason why these companies weren't trading higher until recently is because everyone's like, will this last? Will they keep being able to sell as much of the stuff they can? If I look at Micron, though, I mean, let's just look at that for a second. I think this week, I mean, here, I'm going to tell you what the change from the all-time high. So if I look at this, the all-time high.
You bought this at the open of the week. You're probably not thrilled.
Well, but I mean, the all-time high was 6.3. 6.3. Wow. So it's down 20% from June 3rd.
Wow.
That's Wednesday. It's Wednesday. But even after today, I mean, look, I don't know what this is going to do next week. It just doesn't surprise me. But you look at the March 30th low, it is up 168% off the March 30th low.
I'll give you one better. How much is it up year to date? 173.
Even with the close.
Even with the close, 173.92% year to date. If you are a Micron holder coming into this year and haven't sold yet, I don't think you're really that upset about this move. Again, it's two sides. It's the people that actively trade. Yeah, if you've bought the open on this week and you've held through it, you're probably not thrilled. But that's trading. Investors, there's a reason why you're patient. You buy, hold long term. You just don't know.
Let's look at ARM. ARM's the other one.
Oh, yeah.
Great so one. ARM Holdings, ARM.
420.
Not a recommendation, but let's just take a look at that one, because that one went parabolic. It actually started to come off its highs a little sooner than Micron did. But if you look at them, and then we got to talk about Broadcom as well. We'll get there.
Are you seeing about 20% down, roughly?
ARM, yeah, I mean, I think so. Let's see. If I go I'm on Bloomberg now. I'm doing a little annotation. Those of you at one of these know what I'm talking about.
And when I said great there, by the way, I meant great example. I apologize.
16.73%. It's off the high.
Yeah.
But here's the other thing, Shane. It was, I mean, May 18th, it was 215. And then it hits an all-time high of like 411. So if I look and I say, well, what is it still up even today off the, that May 16th? It's like, yeah, I mean, it's still up 63%.
198 year to date. Yep. Just nuts. 198.9.
So I have Micron from December 31st through June 5th, up 202%.
Wow.
So yours may not have updated. It might not.
Oh yeah, mine might be lagging. Yeah.
213% plus from ARM, and then you look at like Intel. It still is crazy that Intel has made the move it's been, because that was 168%.
Yeah, broke back below 100. We're sitting at 99.17 there. Still up a ton.
It's still up quite a bit. Let's look at Apple. Apple year to date, Apple was down a little bit today. Definitely didn't follow the semis down. It was up most of the day.
Nope.
Total return up 13.25% this year. You know what's really hard though? And like we talk to people all the time, some people who, bought these stocks a long time ago and the position has grown to be bigger and stuff. But you got to think with some of these companies, let's say you held ARM, let's say you had a bunch of ARM Holdings shares or you had a bunch of Intel shares, whatever it is. And you're saying like, oh man, this position has grown into something really, really big. When do I sell? And throw out the tax consequences because that's, depending upon who knows what everybody's basis is. But it's one of those things where I'm sure there are some people who sold and saw it run up more and are like, oh. And then some people said, maybe today, oh, it's coming back down. I got to sell now. And other people are like, hey, I saw where it could go. I think it can go higher. Like, don't you? It's really hard. And like we work with people like this. Sometimes we collar things where you're selling premium to finance protective puts on the downside, and you have this range. You kind of lock in a floor. But I just think it's really hard right now. Like if you're somebody who has these stocks, imagine you sold when it was only up 100%, and you're like, oh, I totally missed it. So I wonder if some of today, as you get the pullback, it's people coming in saying, I don't want to see my gains go. I just want to, now I got to ring the register. I mean, you got to think there's some stuff like that, but this is really hard emotionally to deal with one stock if this is a really big holding.
Absolutely. And it depends on, your age, your tax bracket. Is it in a taxable or non-taxable? All those things matter, right? Absolutely. And I think that there's a lot of glitz and glam. And then there's also, just a lot of doom and gloom about concentrated, in the sense that if you lean really hard into one thing and that one thing takes off, there's the potential to see a very large return. The doom and gloom is that if you lean really hard.
Do you have Bear Stearns or do you have Micron, right?
Who knows? And good luck knowing which is when, right? But the other thing that it's probably less talked about the glitz and glam side is, let's say you do get concentrated, you do get the run, like you just said, you're sitting here thinking like, do I take this money off? For some people that are in these positions, it's life-changing money. It's their entire net worth in some instances, right? And so it's very hard because, like you said, don't want to see it go away. Don't want to miss out on more if it comes. But at the same time, it's really hard to stomach watching what was a much larger gain slowly get eaten away. And I think anybody that's been in the market long enough has probably experienced that in some manner or form.
Losses feel worse than
wins. Always.
Yeah. It's always that. And it's funny too, because you think it's not even the wins. Like let's assume somebody enter the tech stock current, SanDisk, they bought it, 10 times lower than it was. It's like you could have the gain, but if you give up a certain amount of the gain, even though you still have a huge gain in the stock, you might feel bad. But there's no way to know when the top is. There just isn't. This is hard stuff to do. I will tell you that today I kind of follow the equal weight a little bit, the RSP, which is an ETF. It's an equal weight S&P 500. That was down 1.42% today. So you think about that, and equal weights down 1.42. We said the cap weighted index, the S&P 500, the one you normally see on TV, that was down 2.6. This was really some of the bigger stocks giving it back today. And there was a chart. Let me see. This is put out by the Compound Media. I thought this was interesting. It's a scatter plot. And the title of it is 51% of stocks up with index down 2.1%. And they've got this XY axis. So the Y axis, for those of you who are familiar with this stuff, that's the one that goes top to bottom. On the left-hand side, it's the one-day change in the market. And then the bottom axis is the percentage of stocks advancing. And today, you can't see the chart for the audience, but it's kind of an outlier. Like Shane, if you took that dot and you moved it to the left and you put it in the middle of that, the linear line there, that's kind of,
Yeah.
you would think only with a move today, probably what, 15, 20% of stocks should be up. And today but that's that difference.
Yeah.
United Healthcare was up today. Apple was up most of the day.
Yeah. I mean, if you look at the S&P 500 heat map, right, it's like there were certain areas of the market that were up a ton. Healthcare was up a bunch today.
Yeah, United Healthcare was up. I saw that.
Yep. Lilly, Johnson & Johnson, AbbVie, Amgen, Pfizer, like all up. Consumer defensive, not everyone in consumer defensive, but quite a bit, 3.46% on Coke. PG up 4.09%. Walmart up almost 1%. Costco flat. Pepsi about flat. It's interesting. Insurance up. Utilities up. And, this begs my question as I'm looking at this. And we're sort of just describing the general environment and where we are in this market right now. Look, you're approaching the end of Q2. And then we've got Q3, July through September. You've had this historic run in tech, specifically the semis, but tech in general has done very well. Do you see a little bit of rotation? And then also, too, let's not forget, you've got SpaceX and Anthropic IPOs on the horizon. So does it also surprise you? You've got the combination of the historic profit and the historic run up in tech. So some profit taking there. You got some end of quarter rebalancing, if not started now, is probably going to start soon. And then you've got two of the biggest IPOs in the history of the market potentially here approaching very soon. I wouldn't be surprised to see some profit taking and some liquidity generation to then be ready to go for, again, just quarterly rotation and then some of these IPOs.
Well, speaking of SpaceX, I don't want to spend too much on this because I think we covered this quite a bit in the last couple shows. $135 a share is the IPO price. And that's a little different because normally you kind of don't know the price until a little bit later. It looks like they've set the price. I got to be honest with you. You and I both were busy trading and doing some different stuff today. But the valuation, $135 price tag, values the company at about $1.77 trillion. So it'd be the seventh largest company in the US. Its value would go above Tesla. It's scheduled to begin trading on the NASDAQ under ticker SPCX on June 12th. So that's next Friday. And they're raising $75 billion. So this will eclipse Saudi Aramco's 2019 record as the largest IPO in history. And as we know, I think Goldman Sachs I believe they're their lead underwriter. I could be wrong on that, but I think I'm right. But Schwab, for example, is part of the selling group. And I think Fidelity is there. I believe some of the other ones. And yeah, I mean, this is kind of a big deal. You and I had referenced that Forbes article that we found talking about when it does go in the index, because the float is going to be small because a lot of the shares are closely held or, control shares. So I don't think it's not going to be the seventh highest company weighted in the S&P. Well, it's not going in the S&P yet, but in the NASDAQ. So yeah, I mean, that's kind of a big deal. That would be interesting. And I can't wait to see the Anthropic S1 once it drops. I don't think it's dropped yet. If it has, I haven't had time to look at it. So I tell you what the other interesting thing about today was, Shane, and that is for a while, it has been the oil's up, the market opens flat or down. or wait a second, we do have a deal in Iran, we don't have a deal. Oil's going up. Oil was actually down today. Exxon, Chevron, the XLE, the energy sector Spider ETF, those were down today. Like this was the first day that narrative hasn't been present. Like today was just like a normal, it's going to pull back. The biggest names that have been going parabolic pulled back. And I don't think the market cares about the oil. I mean, the oil is down today. So it's just a change in narrative.
Yeah, no, and I think that this has been a very heavily narrative-driven market. It's not that the numbers aren't there. You know, we talked about that. We're going to continue to keep covering that because, again, that's at the end of the day, if the estimates start pulling back, that's when you start to maybe get worried in terms of, you know, being long. But for now, you've got strong numbers, and at the same time, it seems like this market is able to be moved with a very simple announcement, right? Any type of news related to some of the geopolitical stuff going on, any type of news related to, you know, the domestic economic or market related topics. It's just very sensitive. I think that goes back to, you know, how automated the market has become. It makes me think of trading places, how they'd wait for crop report standing around the TV, right? And then trade right after. We don't do that anymore, right? I mean, you might watch the TV, but the algorithms that are being used, the larger institutions, banks, et cetera, I mean, they're so reactive to what comes out on either X or elsewhere that it's hard.
I think you're bearing the lead a little bit, and that it was earnings that kind of sparked this. AVGO,
Absolutely.
Broadcom. So, you know, according to reports, quote unquote, it's the shares. We know the shares went down. We'll have to check their pullback from its all-time high. They beat Wall Street expectations. So they beat the numbers for earnings and revenue, but they fell. I guess there was a slight revenue miss. I'm kind of reading a recap here. And quote unquote, underwhelming Q3 AI chip forecast, and CEO Hock Tan's decision to leave long-term AI sales targets unchanged. Like this is really, you know, Broadcom comes out. Was that Wednesday night, Shane, after the close, right?
Yep.
I think it was. Okay. So you kind of look at AVGO, and this is another one that, and by the way, this stock is a big stock. I mean, it's in the top 10 of the S&P 500. It reports late. I mean, that was a late earnings report. We always think about not Intel. NVIDIA is the one. So they report, and yeah, I mean, they were, let me just get the number here. Yeah, they're off 20% off their all-time high, which was only June 2nd, 481.57. Today they closed 385.73. So this was the story. Like finally, it just started to break a little. And I think to your point about the traders and people's, like a little bit, the momentum gets going here. First couple of people sell, and people don't want to be left holding the bag here. So
yeah, we'll see. Yeah.
All right. I want to talk about Bitcoin a little bit. I know everyone's really shocked because you know how much
It's been a while. We got to touch back on it. You're loving what you're seeing, right? I mean,
I don't want people to lose money per se, but I just have to be, you know, one of the things that MicroStrategies or Strategy, formerly MicroStrategy, I don't know if you saw, but they sold a small amount of Bitcoin, 32 Bitcoin, according to MarketWise, to fund dividend payments on its outstanding preferred stock and to claim tax benefits. It's the first sale they've done since 2022, according to Investors Business Daily. Strategy now carries significant recurring dividend payments on its outstanding preferred shares. Yeah, they issue prefers. They also have debt. The debt coupons aren't that high. A lot of those are converts, so they keep the coupons low, or they have a zero coupon and they're just doing converts. But rather than selling common stock and further diluting shareholders, selling a tiny fraction of its massive Bitcoin treasury provided the needed liquidity. They also said selling portions of Bitcoin purchased at higher prices allows the company to realize tax write-offs offsetting capital gains. And let's see. Yeah, it's not even, I think some people, and I did look it up, and some people online were not happy that he sold because they're like, why are you taking Bitcoin down? Look, I mean, they issued preferred stock. Preferred stocks have a dividend. So if they don't have enough cash from operations, and we've talked about, I mean, their core business, I'd have to look it up. I'm speaking, freely here without, not freely. I'm speaking like off the cuff. I mean, like if they don't have enough cash flow, they either have to borrow more money, they have to sell more stock, or they have to sell some Bitcoin, sell some assets on the balance sheet. So
Yeah, like any business. Like it's, I don't know, wouldn't you have expected? I thought this would have happened actually sooner. I'm not surprised. And I wouldn't be surprised if we go lower, if there's more drama or more, who knows what's going to happen, right?
Well, they're down 53% off the high. So
he did it once. He could do it again. He took the company down to like what, $1 after the .com bubble.
Well, that was a different. I mean, this is very. I mean, obviously,
they weren't.
Your fate is going to be what the price of Bitcoin is,
right?
And some multiple, whether investors think you should just pay for the net asset value of the Bitcoin on the balance sheet, or should you pay some multiple.
And Derek, go ahead.
Go ahead.
I was just going to say I wouldn't pay somebody else to buy Apple for me. But that's just me, If I was bullish on Apple, I'd probably just go buy Apple. But some people, I don't know. I've always made the argument: does he acquire something? Does he become something bigger than just purely Bitcoin? Some type of a lending institution or a financial institution beyond just that? I don't know.
I don't know what his plans are. It's like I don't know. The people this makes sense to, like, look, I've really looked at this. I have spent like my own free time on like a Sunday afternoon just looking at this stuff. And the point about Apple is, yeah, like if you wanted to lever up and buy Apple, you could do it with options. You could, and I'm not suggesting people do that, but that's available. In other words, if you wanted to buy Bitcoin, there's IBIT. There's different Bitcoin ETFs. People could go on margin. I don't suggest that. It's a very volatile asset. You could use options to leverage. I don't necessarily recommend that. There's a lot of volatility in the underlying asset. So, and you look at these major corrections from all-time highs. This is from Charlie Bolello. Let's see, October 6th, 2025 to today, 53% decline over 242 days. So, all right, what did Bitcoin close at today? Did it break 60? Do you know what that is? I guess I could look that up.
61,594 is where we're at. It did break recently, about 2 hours ago. So around.
Okay, so it did come down and then
broke 60, bounced back up. Yep.
Okay, so it looks like his numbers were at the low, 59,640. Okay, so then you look at, I mean, it's 30% decline beginning of 2025, 2024, 33% decline. November 21 to November 22, 78% decline. So you look at these declines, and some people would say, look, it's done it before, it can come back. I don't know.
One of the most technically driven assets, I would argue. One of the most technically driven assets.
But I got to be honest with you. I think, does anybody even asking you about Bitcoin anymore? I don't think anybody's even looking at it.
No, I mean,
a lot of flows out of the ETFs.
Yeah. I mean, the people that were in it were already in it. The people that got in it over the past probably 1 to 2 years were people that bought into this narrative that, like, hey, it's the best performing asset class ever. If you look at it historically,
they're bored with it. They're buying.
Yes, exactly. It's not
buying semis.
It's not exactly. Bitcoin is not doing what they were promised a year or two ago when they decided to get into this. And so naturally, yes, they're going to other places like the semis. and the semis are doing a lot better at this moment.
I mean, don't you think too, Shane, that the ETFs were thought to bring all these new buyers into Bitcoin, and the existing holders were ecstatic about it. But those people are very quick to sell, and it's very easy to sell an ETF. You don't have to go into your cold storage wallet. I know you can trade on Coinbase or other. I mean, there's tons of
Right,
Robinhood,
right. But it creates liquidity, right?
yeah. But don't you think? Like, I think people are apathetic about that. I think there's apathy coming in, and I see people who have held Bitcoin positions just be like, "This is dead money. I think this is dead money. I just have to get out and put my capital to work somewhere else." So, and that's the danger of this. The excitement goes away, or people move on to other things. I'm just saying, nobody's asking about Bitcoin anymore.
So if you know about it, if you know about the cycle, there's this argument theory basis for this idea that Bitcoin trades in a 4-year cycle, and this is technically supposed to be happening right now based on that cycle's logic.
So did you short at the top and you're buying at the bottom, or
I don't touch it. It's just not my. I know. I just haven't. I've.
But here's the thing: if that's true,
it needs to stick to it.
You're not wrong, but I'm saying if that's true and everybody knows that, why didn't everybody sell at the top?
I don't think I don't think everybody knows it, but I do think smart money probably does. I think that smart money probably did get out at the top, or more informed, if you will. But the reason I bring this up, you hear these arguments are like, oh, it's if the money supply goes up, Bitcoin's just going to inflate naturally because it's a counter to the inflation of the dollar. You've heard these arguments that, oh, it's not just purely a tech play or a technical play, and look, you've got tech outperforming it. The actual, I'd argue, the actual argument for bulls of Bitcoin that they want to see play out is that this cycle continues to hold. A detachment from this cycle would cause people to start thinking about, okay, well, if it's not this thing that just trades in this 4-year cycle, what is it? Right? I think this is all that's sort of left in terms of the narrative. Like you said, we've got Saylor selling. That's really upsetting a lot of people in this space. Not everyone. Some people are understanding and say it's okay. He's still net holding a lot. But yeah, I mean,
I'm going to make this even simpler, Shane. Yeah. I just sent you from Bloomberg. This is an NAV screen. Yep. And the bottom of that chart where you see the green and the red bars, this is really simple. Look at how people have been, the fund flows.
Money is flowing out.
It's flowing out. And so earlier in the year at the all-time highs, money was flowing in. It's very simple. It's money flows are really important when it comes to this stuff. And right now the money is flowing out. If that stops, if that abates and people start buying again, sure, it can go up. But audience can't see this, but there's a bunch of red bars that are facing down instead of green bars that are facing up that represent millions of dollars going in or out of, I'm just using IBIT as an example, as a proxy. There are other ETFs. So I don't know. I think at this point, like, I'm a bystander watching strategy, and it's just people, there's a little bit of apathy. Like, what's going to get people excited again? I don't know. But I will tell you what I am interested in, and I'm going to get my popcorn out for. I'm not rooting for people to lose money at all. Let me just be clear on that. But if you go to strategy.com, they put their debt on there. And one of the things that their debt has is, I think it's a year from now. Where is it? Yes, if you go to the credit, if you go to debt, the 2028 converts. The conversion price is 183.19. So what was today? Like, what's MicroStrategy's today? 120 or something? MSTR. I got to look it up. 120.44.
Yeah.
So if it's above the conversion price, meaning let's say it's trading at 200 or 300. The bondholders, the credit holders, they could convert into a certain number of shares at the conversion price, meaning if it's trading at 250 and you can buy it at 183.19, then the conversion becomes maybe appealing. Or you could sell the bond because the bond's going to be priced for the convert value anyway. But there's a put date on this, and the put date is September. So the maturity is 9/15 of 2028. 9/15 of 2027, so a little over a year, the date on which bondholders may require Strategy to repurchase their bonds. So this is a little different. Many people have probably heard of a call provision in bonds where Shane, you and I start Shane and Derek Incorporated. We issue bonds and we say we can call in those bonds if the bonds are at 105 or something like that. And usually we would do that because interest rates have dropped and we're like, let's buy those back in and reissue new debt, or we just have cash that we can deploy and retire some of the higher coupon debt. This is the inverse, where bond holders, instead of the call provision, they have the put provision. They say, you have to pay me whatever and it might be at par value, it might be at a different value. I'd have to look at the instrument itself. But that's an interesting thing because in theory, I think the notional size of this is something like $1 billion. So if that gets put to MicroStrategies, and maybe Saylor's commented on this, in theory, they've got to issue stock, roll the debt so they can issue more. They can roll the debt. They can sell more debt, new debt to pay the old debt, do $1 billion line, or they can sell some Bitcoin to do it.
Yeah.
I don't know. Yeah. I mean, that's kind of an interesting thing. All right. We spent too much time on Bitcoin, I think.
I'm sorry. I shouldn't have let you.
You should have just cut me off.
No.
You know how much I love talking about this stuff.
Yeah.
All right. So I guess the other thing I wanted to bring up is just interest rates. And I did take a look today and I was trying to see what is the Fed funds rate, the probability say about future interest rate decisions. And right now, I mean, they're pretty much pricing in a hike. In fact, they're pricing in a full hike by the December 9th meeting. I got to be honest with you. I think the market has this wrong, but maybe I'm wrong. I don't think Warsh was brought in to raise rates. But if inflation, and here's the other problem I have with this, Shane. Raising rates doesn't cure high oil prices. So I don't know. I mean, do you think we're going to get a hike, 125 basis point hike by the December meeting?
I think there's more of an argument for why you would see a hike coming from this jobs data than it is oil. Again, I've said I'm a huge believer of the idea that oil isn't a demand side issue, it's a supply side issue, and the Fed's interest rates can't do anything to supply side related inflation. And at the same time, I would also actually make the argument that the only way they could solve supply side inflation is actually, probably lowering rates to encourage borrowing, to encourage the build out and expansion of energy and oil drilling and processing and stuff. And so one thing that I think the market's been really quiet about and hasn't been talking about is the major increase in oil coming out of Venezuela, both to the US and India and elsewhere. I'm going to try to pull up some data on that real quick.
Yeah, I mean,
and I would make the argument if you get oil pulling back down, and I could see if oil comes back down and there's no more concern over that, maybe they do cut. And maybe the market's just pricing in a worst case scenario right now with expecting one rate hike by the end of this year, beginning of next year. I think that's what it's pricing in right now. Is that correct?
Yeah, it's one and maybe another one at some point.
Okay.
But I just got to be honest with you. I don't think if you take oil out of consumer price index and core doesn't have food and energy, and then you kind of look at I mean, if I look at core services, so services is what? It's shelter. So 3.268 was the core number year over year, okay? And of that, shelter was responsible for 1.93. So if you do the math, all right, you take out, so this is excluding energy, excluding food, which, by the way, people kind of buy those. So it's always like, yeah, you can't keep taking stuff out to get the number you want. But if you subtract out the shelter component, shelters like your housing, 931, core was up 1.33% year over year. And I don't think I don't even know which episode it was, but when they started raising rates on the podcast, I talked about there was a Federal Reserve paper, an academic paper that actually looked at the effect when the Fed raises rates, that it raises the inflation data on shelter. Because what happens? It costs more.
It costs more, right?
Yeah.
Right.
And even though they don't look at interest rates per se or, mortgage, all that stuff, like your owner's equivalent rent.
Exactly.
If your mortgage is more, you're going to demand more.
Right.
So I'm just saying, like, if you raise rates, that will increase housing cost.
Yeah.
I'm sorry.
Wasn't the whole argument that like it's raising rates is actually you're trying to stifle demand side inflation by raising rates at that point. And if you're trying to stifle demand, like that's kind of like hoping for I'm not saying they're hoping for something to blow up, but I don't think in our economy and the system we operate in, like I don't think it's necessarily a great idea to try to kill the consumer, or hurt the consumer.
No, I'm not a fan of that either. I mean, I guess, and I go back to, and I was very clear, and I was ready to be wrong if I was wrong, but I said when they were raising rates in 22, inflation coming down has nothing to do with them raising rates.
No.
The only argument is that the price of housing did abate and stop going up. So that's a fair point. If you say, well, you stopped home prices from continuing higher, where people would list their house, it'd be sold in one day, those types of things. But I mean, it was a supply shock. It was a supply side inflation, which not a lot of people have dealt with. Now, you bring up the Venezuelan oil exports, and I think that's a fair point. Like, oil is coming on, and if they get their stuff situated in the Middle East, we'll see when that happens. But the back end of the curve is telling you it's going lower. Like, I think we're still inverted, right? So
yeah, well, I think that there's also a growing interest from the rest of the world to maybe explore other areas of the world that can provide oil that isn't this one little strait in the Middle East. And I think that you're seeing an improvement. We lifted the restrictions or bans on Venezuela for energy here, and it's like,
didn't we do some on Russia too?
I think we did, and I don't know. This is a really, really interesting area of the market that I think people have kind of forgotten about because their focus has shifted to the Middle East and what's going on there. And it's like, you got to look at where else oil comes from. You can't just focus on the one spot. And, things seem to be shifting in a manner where, look, exports are increasing significantly. What's this say here? According to I apologize if I say what's how to pronounce this name? Kobayashi.
It's a character from what's the movie with the seven guys? What is his name? The Usual Suspects. Yeah.
Got it.
Good movie. Yep. All right, go ahead.
Yeah, that's it. Yeah. Oh, so it says since November 2025, Venezuela's oil exports have surged about 150% or 750,000 barrels. When you're thinking about, don't get me wrong, that's not a lot compared to necessarily what's going on in the Middle East. There's still there's a difference there. But I would expect this to continue to rise, wouldn't you? I mean, I don't see any reason for it not to, especially if there's still the demand out there, and there's a bottleneck in one area of the oil market. And it's not like this is just coming to the Americas. This data here says that it's looking like 558,000 barrels per day to the U.S., 427,000 barrels per day to India, and then 169,000 barrels per day to Europe. A surge in export. Yeah.
Let's bring this back to the market, though. So the market, you're saying, if we are in this regime where oil up bad, market's down, and today that kind of broke, you're saying that maybe there's more relief on oil.
Yeah, maybe it's not as bad. Maybe. We'll see.
All right. What about gold? How come gold is not? I mean, gold, the safe haven gold, did not do anything today.
Let's check gold year to date.
Okay, fair enough.
I got GLD year to date. Wow. Down. I got it slightly down year to date. I was not expecting that. I've not been paying attention to gold as much as I should. And that's
are you a buyer here?
I don't know, because
isn't it? Everyone's always like, yeah, I'm gonna wait till it comes back down and then I'm gonna buy it. Where are those people?
It was the asset last year. I mean, it was
last 3 years. So gold was down 3.65% today. Silver was down 8.08% today. And if you look at GLD as the proxy, that's a State Street gold ETF, the original one actually. We are at levels from December of 2025. So think about that. It has erased basically all of the move this year.
Kind of to your point, it's deflationary today. Like, we're not in a deflationary economy, but like everything went down today except some yields. I think like metals were down.
No, well, I was going to say bonds were down too.
Bonds were down. Yeah. Bonds are down. Yields are up. Most commodities were down. I think corn's down, at least according to the Tucrium Corn Fund. I don't have the corn futures in front of me, but what I'm getting at is like everything was down.
Well, look at IEF today, which is the 7 to 10 year Treasury. What's that? The iShares one, I think.
Yeah, down 0.5%.
Half a percent.
Like there's no safe haven today.
Look at SPTI, the State Street, the 5 year.
Yep.
SPTI down 42 basis points today.
Like we said, I'm Bitcoin.
Can I tell you though?
Yeah, go ahead.
Look at HYBL. Look at JNK. Look at SJNK.
Yeah. How's high yield doing? How are the spreads?
High yield is doing better than treasuries. So interesting. SJNK, short duration high yield, down 32 basis points today.
Interesting.
JNK down.
Not what I would have expected. Yeah. State Street Blackstone senior loan, the Sirloin, SRLN, down 17 bips. Wow.
Yeah, that's right. Yeah, and loans, those are loans versus bonds.
How did real estate do? VNQ. VNQ up 72 bips
up today. Yeah.
Wow.
Healthcare. If you bought healthcare and real estate yesterday and shorted the semis and the memory and the software.
Oh, I'm sure there's tons of people out there that caught that. I'm sure.
Yeah. Yeah. Right. So just like the people who bought oil on December 31st.
Oh, right,
we actually remember we said it was the contrarian play.
We did. That's the funniest part.
We didn't tell people to buy it. We're like, but if you're total contrarian, like, what do you buy? You buy what nobody wants right now.
Right. Oil.
So
which maybe that comes up here in a couple months with Bitcoin. We'll see. We're talking about how nobody wants it. It's seeing a lot of outflows. It could go to zero. Who knows?
It could go to 1 million. I mean,
I'll
let you know when I know. It's like,
right.
So I look at the XLE and Exxon. Yeah, I mean, WTI was only down 2 points today. I think it was down 92 to 90. Not that big of a move. I think these stocks are just selling off because in sympathy with everything else. But all right, well, I mean, I think what I want to see, and we talk to a lot of advisors, talk to a lot of individuals who are, invested in the markets. I'm curious to see over the next week, or as they start to read about this over the weekend, is it this is the end. I need to get out. And we
Right.
always tell people like part of what advisors do is they try and what are the goals? What do you want? What do you need? What do you want? Try and merge those two, help people make good decisions, stop them from making bad decisions. And then the tactics get into the types of investments. And, I'm a big proponent of if you sort of have those things dialed in, you're not trying to pick tops and bottoms in the market. You're not trying to really do that. But, I think it's going to be interesting. All right. Any recommendations, Shane?
We've got. I gotta watch The Usual Suspects. I haven't seen it. You brought it up, so I gotta watch The Usual Suspects. So, and I'm sure that's a strong buy, but I'll give the official recommendation next week.
That is a strong buy, and I would say it's a strong buy. And I'm not going to ruin anything for you, but really pay attention towards the end.
Okay.
I mean, pay attention at different points, and sometimes you watch it again and you kind of pick some stuff up. But
Okay. Those are the best. The ones that you go back and watch it a second time and you catch something you didn't the first.
There's some twists in there that are
okay.
Yeah, that's pretty good cast too. Pretty good cast. I think so. My recommendation is to, if you haven't been following the Stanley Cup Finals,
oh yeah,
need to watch that. Last night, we're recording this on Friday. The Vegas Golden Knights had a 2-0 lead in the game. Carolina, wild third period that's tied 1-1 in the series. So when it's tied 1-1, it means now it's the best of 5. And the hockey playoffs are so good.
I'll toss.
And the Knicks, can the Knicks win the first
I was going to say
championship in 54 years?
You got to mention the Knicks, man. So we've got some exciting basketball, some exciting hockey on, and you've got to the U.S. is hosting it. You got the World Cup starting next week. So
it does start next week.
Yeah.
That's right. It crept up on us, didn't it?
It did. I don't know. It's perfect timing, right? You're getting the tail end of your hockey and your basketball straight into a World Cup. So very, very awesome that the U.S. has gotten the opportunity to host it this year, and hopefully it's exciting. I'm sure our listeners around the world are going to be watching.
I am going to watch. And I hate that Apple does this. They don't give you all the episodes, but Friends and Neighbors, I believe it's the season 2 finale they released today. So if you haven't seen that, I think it's pretty good. I'll put a buy recommendation on Friends and Neighbors
John
on
Hamm?
Apple TV Plus. Yeah, John Hamm.
Okay, my wife loves him. My dad's given it a buy too, so I think we might have to hop on that too.
I saw a movie, just random. You ever do this, Shane, where you turn to one of the cable channels and a movie is starting, and it's this movie called Beirut, and it's got John Hamm in it. I'd never heard of it before.
Huh.
I thought it was pretty interesting.
That's one thing I'll say that's great about television still, and I miss. It's almost nice not having the pick, and it's just got something rolling. And like you said, you never know. You might not have seen it, or it might be something you haven't seen in a while.
Yeah. Yep. So, all right. I think we solved everything. So next week, you know what? I was hoping it would come out. The SpaceX IPO would come out after we were all back on together, so we could give like, what's the percent up or down,
right,
on day 30?
Yeah. Compare it to our.
I don't know yet. Where are you? So I don't want to give our official ones, but it will be out, I think.
I think down. I will have a number for you. Well, I think
down from it's open at 135. But I need to research that. That's unique that they've actually set a price.
Set the price, right? And I'm probably going to be wrong. And please, nobody take either side of what I just said. Don't do what you want to do. Don't. Not a recommendation.
I will tell you, it makes it easier for the underwriting syndicate. The brokerage firms is what I'm referring to. That
with the fixed value.
Yeah, because then like, let's say you only want to spend $135,000 on at most, then you're like, okay, well, I'd like up to 100 or 1,000 shares.
Mm-hmm.
So in the 90s, I remember it and I swear this is how it happened. There was a team that would call people the night before an ETF and say,
Really?
okay, you have an allocation. They would sort of confirm, I don't remember like how much. And I feel like it was a dollar amount because you didn't know what the final price was going to be. But I think at that point they had some sort of a range, like the investment banks would give an estimated range based upon the demand. So, and then sometimes they had, what was it, the green shoe provision, where they could issue more shares if the demand was there.
Greenhouse clause, yeah, over allotment, yep, up to 15%.
No, I think it's the green shoe IPO
or green shoe. I misread that. Yeah, green
shoe.
Yep, 15% more shares than originally planned if demand is high enough. Interesting.
Like think about that.
So much goes into this. So much.
Well, I don't know if there's a green shoe at all. I really haven't read this, but back in the day, you would have, if there was a hot IPO. So imagine you were at 1.77 trillion, and you
There's
could
enough
do
demand to get you above.
Yeah, like 1.15 times the 1.77 gets you to 2.04 rounded trillion.
Wow.
I don't know. I actually haven't researched if there's a green shoe on this, but I'm just saying back in the day, that's how it worked.
Yeah.
And
it's interesting. We got PPI and CPI tomorrow, not in that order. CPI Wednesday, PPI Thursday. You also got Oracle and Adobe. Those will be fun to watch. Those have been really big in the AI spending, cloud growth, enterprise software demand, and just this AI build out. So those will be good to watch and probably follow up with next week.
I did Google, where did green shoe come from?
Please.
It says the name is according to Wikipedia, so I'm sure it's true, right?
Okay.
I'm smiling. so the name, because people can just go in and update this stuff.
Oh, yeah.
But the name comes from Green Shoe Manufacturing Company, now StrideRite, which was the first firm to use this practice. So there you go.
Someone wanted to buy a lot of shoe stock.
Did they have a lot of green shoes that they
created?
All right. Well, there you go. There's your teaching moment of the day for investors. All right, that's it. We're done. We'll be back next week. See everyone. Bye.